Welcome to my channel. I'm the cover called Guy, and this is my journey to creating a $120,000 per year passive income portfolio. At the moment, I currently yield about $61,000 a year, just about $5,000 a month, so I'm halfway there. When I reach my goal, I will probably maybe still build up other cover call ETFs. I'm not sure. We'll get there and we'll talk about it when I hit my goal. Before we start, legal disclaimer: all content presented in this video is for informational and educational purposes only and should not be considered financial advice. I am not a licensed financial advisor, broker, or professional. The information provided is based on personal opinions, experiences, and publicly available sources at the time of this video and may not reflect current market conditions or individual circumstances. Trading and investment involve substantial risk, including the potential loss of principal or your entire portfolio. You should always conduct your own research and consult a licensed financial professional before making any investments or financial decisions. Views expressed are my own and do not represent the opinion of any other party or organization. I am just some random idiot you found online, and I could be completely wrong. With that being said, with that out the way, today we'll be talking about which cover call ETF fits you the best. It is going to be an analysis of about 40 cover call ETFs ranked by strategy, risk, and core investment criteria. I've narrowed it down from about 100, maybe 150. I couldn't list them all. I was trying to list as much as possible, but I had to dumb it down because it would have been too long. Maybe the next video I might do the 100, 150 cover call ETFs, but at the moment I'm gonna just do the 40. And let's begin. So, which cover call ETF fits you the best? All right, this is gonna be an analysis of the cover call ETFs. Is gonna be ranked by the strategy, the risks with that strategy, the assets under management, the fund managers, the performance, how old it is, how new it is, what it could be. It was a little bit hard because this is my ranking. All right, I know you guys won't agree with all of it, but it was my ranking. So let's begin. All right, the 6 ranking criteria: balance premium income versus market upside, yield quality. Just because it's giving you 30, 40, 50, 80%, 100% yield doesn't mean anything, right? We have to avoid destructive rock return of capital. Low expense, lower fees for better net returns, because I am trying to hold these cover call ETFs as if I'm holding them till I die for the next 30, 40 years. And then of course which is assets under management and liquidity. All right, so the higher the better liquid it is, the more liquid, and you get better spreads, right? And how diverse it is, no single stock, and then risk adjusted, smooth, risk aware performance. So all of this 6 play a factor, and that's how I determined it. All right, what's your goal? Right, my goal is to balance growth and income, seek sustainable income while capturing market upside. Right, I prioritize risk adjusted returns. Right, so we got to focus on S tier and A tier. That's how I ranked it. And then the goal: maximum possible yield. Right, if that's your goal, then you might fit the B and C tier. Right, you sacrifice all the upside for the highest premium and carries the risk of capital decay. So what's your goal? Right, my goal is to balance growth and income, so I mainly try to focus my buys in the S and A tier. Does not mean I don't have any B or C tiers, right? Because again, when we get down to it, we'll talk about the speculative plays. And then here we just have the ETF universe at glance, right? These are the 40 stocks, my 40 ETF universe, right? We have 12 stocks in the do not buy category. For me, I would stay far away. The S tier, the A tier, the B tier, and then the C tier, right? C tier has 26, B tier has 15, A tier is 9, and then my S tier I have 4. But we can probably put more into the S tier, but that was hard for me. right, so let's look at the top tiers. The growth and active, my S tier, what I call the gold standard. I originally only had GPIX and GPIQ, but I added the JP Morgan cover call ETF. Yes, they may not have the best total return, but because they have the highest it gives them the best ability to grow and stay on top, right? So money matters, right? So yes, we could have had a lot more into the S tier, such as NVDY, QQQI, SPY I. Like those are all great, but I'm gonna have to put them into the A tier just because I feel like it's much newer and it's less proven, and also the asset under management. So, right. So my rationale was massive low fees, active strategies, balancing income and upside, and then the A tier again. A tier and S tier, they almost go hand in hand, right? I could just put all of this in here, and it wouldn't really matter, but I just wanted to separate it for this purpose for the video, right? My rationale was high quality active funds has smaller active assets under management or slightly higher fees than S tier, and that was it. Otherwise, you could put this into the A tier, you could put this into the S tier. It's practically the same. And then we have our core passive and speculative tiers. This is where I would say, I'm a little iffy. I don't really want to put too much into it. I slowly build it up, right? My B tier is core passive. Is the rationale behind this is it's the classic 100% buy right. It's liquid but forfeits all of the upside for premium. So you're trying to max out the yield, but you cap the upside, and you have to be careful of the NAV decay, NAV erosion. So you have to be careful of that. And hopefully I'm introducing you guys to some new cover called ETFs. Some of these are great. When I have to narrow down my stocks, I have to compare and do a lot of comparisons, and I just narrowed down to what I think was what I would buy. So there's the QYLD, and this was almost in the C tier, but I didn't put in the C tier just because it's not speculative, right? We're not speculating on QYLD, right? So C tier is you're speculating, it's niche, it's a lot of, I would put the crypto ETF into this just because it is a speculative asset, right? As much as I love BTCI, I would have to put BTCI into the C tier, maybe into the B tier, just because it's a crypto asset. As much as I believe in crypto, my high conviction is one of my high conviction satellite ETFs. I would have to still put it right between the B and C tier, right? It would probably be like the B minus tier. All right, the rationale for me for putting into the C tiers is not, it shouldn't be a core holding, right? It should be your dabble, extra funds, maybe dollar cost average into it, right? Because it includes zero DTE, right? Crypto and other volatile assets. So you're pretty much juicing up the yield, but your NAV can get absolutely destroyed. And then we had the don't buy list, don't buy tier, right? The highest risk. These are the single stock risk. My rationale for it was simple, right? Single stock funds with extreme risk. Yields are often destructive. Return on capital. That's it. You're juicing up the yield to completely destroy any type of gains. Right? Well, just for example, GOOY all time is down 30%. Or APLY, let's see that. Down 32%. Right, so you're absolutely juiced up on yield, but you completely destroyed your NAV. So I don't even know, depending on when you bought it or how much you reinvested to dollar cost average, you completely just lost money on that, or you broke even. And that's if it is 100% return of capital. Then maybe you have made some gains. But these I would definitely stay far away from. There's a whole bunch more. I remember this entire list was originally like 100, 150 cover call ETFs, but that would have been too long. And of course, again, this information is for educational and illustrative purposes only and does not constitute financial advice. All investment carry risk. Consult with a qualified financial advisor. It's just something I would not buy. right? And these would be maybes, but I would definitely stick with S and A tiers. And again, we have much more cover call ETFs. Maybe I'll do a actual full list of S tiers and A tiers next time, but these would just be my core holding, and these would be my dabble. I am missing a BTCI in it, that which I do hold, which I would put right between B and C tier. So hopefully you guys, maybe if you're about to buy a stock, a cover call ETF, and you came across this video, hopefully you learned something, and maybe you are reevaluating your portfolio, because remember, we are trying to grow the NAV or have stable NAV while collecting that juicy premium. Okay, so hopefully you guys learned a new thing or two, and maybe you agree, maybe you disagree, but this is my ranking, this is my list, and maybe I'll do a longer video next time.